how high would you put the risk of a resurgence of inflation as you start cutting interest rates?
Not very high, Amanda. All the factors that we considered that are risky on the high side seem very unlikely. So I think we're very confident that inflation is on its way down.
Indeed, I believe that you've said that you're somewhat more confident in inflation coming down than you are in the GDP numbers going up,
yes,
which brings me to the question of when would you see the economy, the GDP numbers turning the corner? When might your rate cuts start to have an effect?
That's a very good question. Actually, the relevant policy horizon is 2025 because our monetary policy transmission mechanism has long lags. So we cut yesterday. We might cut again sometime during the year, and then we hope that has a significant effect on growth.
Governor, good morning. Can you spell out to us what you mean by inflation is on a target consistent path? Because, as I understand it, the July headline inflation number was 4.4%, which is still outside your target range.
Yes. Our inflation numbers have been well behaved in the sense that they've been consistent with our projections. Even the July number was expected. 4.4% is partly base effects. If you take out the base effect, it would go down to 4.1, which is still outside our target range, but still it was an unexpected number. So we're happy with the inflation numbers. They seem to track, our models seem to track them very well.
Governor, how concerned are you about the volatile external backdrop? The Philippines is a net oil exporter. When you consider
yes.
what is happening in the Middle East, when you consider the risk of a broader conflict, how closely are you watching these developments in terms of a potential upside risk to inflation and that really undermining your calculus?
Yes. That is a risk. There is an upside risk. But when we look at the larger picture, it doesn't look like things would be that bad. The markets, the futures markets, as you know, are saying that oil prices will be coming down.
With regards to the Federal Reserve, I understand that you believe that they're going to be cutting interest rates by 50 basis points at their September meeting, even though the odds, at least in the futures markets, do seem to be coming down for that 50 basis point cut. Why are you still pegging it at 50?
I'm really pegging it at 100 basis points for the rest of the year. In fact, that's what the derivatives markets say. And I think it kind of makes sense because the numbers have been weak. Not weak enough to suggest a hard landing, but weak enough for FOMC cuts. Maybe as much as 100 basis points this year and a similar magnitude in 2025.
Okay, so potentially 100 basis points this year, plus, of course, you yourself seem to be on a cutting trajectory. What, therefore, would be the effect on the Philippine peso?
I think it might put a bit of pressure on the peso because the differential will widen if the easing is as much as we expected. But what we call the pass-through, the impact of exchange rate depreciation on Philippine inflation is very modest. So we don't worry too much about a depreciation of the peso.
Governor, fundamentally, can you comment on how weak household consumption is within the Philippines? Because that was a factor that determined lower rates. And furthermore, can you give us some insight about
yes.
remittances and also broadly FDI inflows and how that potentially supports or undermines the fundamentals of the Philippines economy?
Yes. Remittances as well as business processing revenues, these are our main service exports. They've been a source of stability. They've been large, growing, and fairly stable, and they dominate actually inflows through say FDI, foreign direct investment. The two of them combined, those service import exports, sorry, combined are about 7 times our average foreign direct investment. So the service exports are a source of stability and strength for the currency.